Well, hello there. Hello. Thank you for stopping by the channel. Welcome to WTF Mortgage. And thank you for checking out this video. This is going to be a mortgage interest rate update for Feb 20th, 2025. And I am going to compare today's pricing with the pricing from Feb 11th so we can compare and get an idea of which direction things are going in. And by request, I'm also going to show some 15-year rates. All right, so a little about me. I am a licensed mortgage loan originator. I am also a licensed mortgage broker. I am also a licensed real estate broker. And this month, on the 13th of this month, February, was my 27th year doing mortgages. All right, let's get these rates going here. What a difference 7 days makes $1,500 little dollars. All right, check this out. Nice, another drop. All right, so let me explain this really quick for people popping by who are new. I apologize. I'll make it really quick for the old people who are subscribed and might be watching this. So what you're looking at is the full spectrum of available rates, that 4.25 on up to the 7.625%. That spectrum of rates are available at every lender, every bank, every brokerage, every credit union across the country. They can all advertise within these rates here. But you won't see all of these rates because they advertise in a zone of rates that they feel are the most attractive to the consumers based on the fees associated with those rates. And right now that range is about 5.875 to 7%. That's what I call the Goldilocks zone because that's where everybody is advertising. You might see a couple outliers out there, like some places advertising as high as 7.5 and maybe somebody as low as 5.75, but in general right there in that 5.875 to 7% range. All right, let's move on and take a look at this. Look at that. So I'm not going to talk about all these to save some time. I'm just going to talk about maybe two of these rates here, and the others you can maybe pause the video and go look at them on your own. Now this is live pricing. These rates are real here. So check out. Let's look at the 5.875 one. Look at that. The fees last week, $15,228, and the APR was 6.179. And then now the fees drop down to $13,675, as you can see, and look at the corresponding APR drop down to 6.148. So you remember that APR rate and fee relationship. If not, I won't take your time on this video, but refer back to the video on the 11th. I mentioned it on that video and a bunch of other videos, how to use the APR to determine if there are fees associated with a rate being advertised. All right, so nice little drop there. Let's check out, how about let's go to the 6.625 rate. The 6.625 rate on the 11th had dropped down and to $1,572 with an APR of 6.656. Now check it out. The 6.625 rate dropped down to no fees and a credit of $627. That's just from last week. And look at the corresponding APR. It now dropped down to 6.625. Remember what I told you about that rate APR fee relationship? When the APR and the rate are the same, that means there are no fees associated with the rate. So check it out. It dropped down to no fees and the APR and the rate are now the same. And you can check out the other ones. You'll notice the 6.875 and the 7% rate. Those credits went up accordingly from last week, and they went up quite a bit, as you can see how much the credit jumps. So what's going on here? Well, don't know yet. We can't say for sure yet. Remember, I made these predictions last year, and I mentioned right after the president became president-elect that we would start to have some drops after inauguration. So this is happening now. But if you happen to watch one of those older videos, those last year videos, I also mentioned that don't know how deep the drop will go and how long it will last. So I recommended getting it while the getting's good. Is that how you say it? And that is, if you're sitting there with a 7% rate, that 6.5 would be mighty tasty for you. Look at that. That's barely any 1273 in fees. That's nothing. Throw on a little title and escrow on there, and you might have a couple thousand and something dollars worth, and dropping it down. But dropping down that 0.5%, that's about $200 and something a month in interest for a loan that hardly costs anything. I mean, heck, you can go to the 6.625 one and do total no cost, and you got the credit there, and you can refinance if things drop down a couple months later. That's the beauty about doing either a very low cost or no cost loans, because you can do it again if rate pricing drops down. So you can, how you said it, get that bird in the hand instead of chasing the other one in the bush, and you get that bird in the hand each time instead of trying to wait till you can drop it down a percent like that old silly unfounded legend says, or drop it down to 1.5% or whatever it is. You just do these incremental drops, drop a 0.5% maybe, and then another 0.5%, and get down there and do the low cost or no cost loans. You can just do it again. You don't have to worry about breaking even on the cost because you did it at little or no cost. So I'm still recommending that technique, but so far this is the fourth week in a row we've had a drop. Certainly looks like a trend, but you never know. I am predicting though we might get this always happens, you take 3 steps forward, 1 step back, 2 steps forward, a half step back, but when you're trending in either direction, where they're trending up or down. So we may be trending down right now, we may spike up a little bit, and then if we spike up a little and then we go back down even bigger, that's definitely a downward trend. All right, so next week what I'll do, and I'm going to talk about 15-year rates here in a moment, but next week what I'll do is I'll get into the 10-year treasury and a couple mortgage-backed securities and show you that relationship, which I haven't brought that up in a long time. I haven't really mentioned it in any of these recent updates, but I'll talk about the trend, and then I'll talk about the relationship between the 10-year treasury and the mortgage-backed securities, and how we can use that to confirm what's going on. So let's go ahead and get into some 15-year pricing by request. All right, let's finish things up with some quick 15-year pricing, and as you can see on the screen here, I've put the 15-year pricing alongside the 30-year pricing so we can kind of compare, see the relationship there. As long as I've been doing mortgages, the 15-year pricing is typically about 1% lower than the 30-year pricing, with a couple exceptions over the years, and I mean just a couple. It's typically 1% lower. That is the advantage of doing a 15-year loan over a 30-year loan. If you put the amortization schedules side by side, a lot of people get fooled because on the 15-year loan, a lot more is going towards principal. In fact, probably in about the 11th or 12th year, it's about equal amount principal and interest being paid down. That's not because the 15-year loan amortizes differently. Maybe I'll show that in another follow-on video. It's because of the larger payment, and you can have the exact same effect on a 30-year loan. Your 30-year loan, if you make that 15-year payment, it will pay off in 15 years. If there's a difference in the rate, like if the 15-year loan has about 1% lower rate, they won't pay off exactly the same. The 15-year loan with the lower rate will pay off a few months faster because of the lower rate. But if you put the amortization schedules side by side and you plugged in the exact same rate on the 30 and 15-year loans, and you made a 15-year payment on that 30-year loan, they pay off exactly the exact same day and month. The benefit, again, I'll say it one more time because there is some confusion about a lot of simple concepts like this. The only difference, the big advantage of a 15-year loan is the lower interest rate. And if you can't get a lower interest rate, at least 1% lower on the 15-year loan, you might want to question doing that 15-year loan. I would stick with the 30-year loan and make the extra payment. But if you can get that full percentage drop, then that's nice. That's nice money. Now check it out here. So you can see on the chart, you probably already looked at it while I've been flapping my gums, but let's just look at it really quick here. So you can see on the 30-year loan, the 5.87 loan pricing is about almost exactly the same as the 4.875 loan pricing. You can see it's almost exactly 1% different. And you can look at it another way. Check out the 5.875 on the 30-year compared to 5.875 on the 15-year. The 5.875 on the 15-year has no fees and a credit of $2,009. So you can see it's basically a full percent lower on the 15-year loan. But that's the 15-year pricing. You can take a look at the rest of it, pause the video, and later and take a look if you want to see all the other 15-year pricing. Let me know if there's I did this by request. Somebody wanted to see 15-year pricing, and if you want to see a different type of pricing, go ahead and drop it in the comments also and let me know. And also let me know if you want to continue to see some 15-year pricing. All right, so this concludes the mortgage interest rate update for February 20th 2025. I'm going to do another one next week because, like I mentioned last week, or was it the week before, I'm going to follow things really closely because we are in this potentially downward trending mortgage rate market. So I want to give y'all the play-by-play update on what's going on. So when those good deals come along, you'll be able to, boom, be a kick-ass shopper and snap those right up. All right. So thanks for checking out the video again, and I will see you on the next update next week if you're going to tune in.